Well, thanks for joining us. I'm Marlon Bowling with you on Export Sales Thursday. Well, we did have weekly export sales numbers out, and in case you missed it this morning, here's a look at what they held. Now, on the corn this time around, well, we had some decent sales. There were 527,100 tons. It was right in the middle of expectations. Soybeans came in at 189,000. That was toward the lower end of expectations. They thought it could be anywhere from 0 to maybe a little over 1 million, so maybe a disappointment there. Soy meal, 409,000. That was above expectations. Soy oil, 2,400 tons. That was okay. The wheat, 374,100 tons. Was right in the middle of the trade guesses right there. But then we had an overnight sale announced again, and it was soybeans. 132,000 tons were sold to China overnight, and another 260,000 tons were sold to unknown destinations. So that'd be the third time this week that we had overnight export sales, but the market doesn't seem to care one iota. We're selling off again. Let's go through these here. On the corn market so far today with our quotes provided by bar chart. September down 14.5. December down 13.25. We're at 522.5 right now. In the soybean trade, we have the August contract 27.75 lower at 13.1825. And November down 28 cents at 12.7225 right now. Over to the wheat, we go to Chicago September. We're down 15.75 cents at 6.48 per bushel. In that same September contract in Kansas City, it's down a dime at 6.1075. That's off its overnight high by about 13 cents, by the way. Minneapolis wheat, September down a penny and a half is all. It's at $8.75. We're joined by Ted Seifried of Zaner Ag Hedge in Chicago. A lot of pressure in this grain complex today. So what do you make of the fact that they're totally ignoring these overnight export sales on beans? That's over 1 million tons this week.
Yeah, like you said, 1 million tons this week. And you know, that unknown destination sales likely to China as well. So that's great. You know, the market's concerned that, you know, ASF popping up in China again, that maybe they won't have the demand, but at the same time, they're buying soybeans right now. So that's a little disappointing. Now, it's a weather market, Marlon. As we know, when the weather is showing rain at this time of year, we go down. And that's kind of what we've been doing. We've broken some key technical support for both corn and soybeans. So we are following through to the downside. However, you know, a bigger break is actually not a really bad thing, because any questions that we have about demand will start to get answered as we go lower. That gives end users, both domestic and globally, better opportunities to buy cheaper. And as we've seen, China is starting to buy. So I think a break like this starts to make us feel better longer term. I'll also say that there seems to be enough problems with this crop that unless we get that 8 to 10 million acres extra in the row crops on this report next week, I think it's going to be a real struggle to come up with the supply needed to reach the demand numbers, as long as we can believe that those demand numbers are going to be there. And again, the bigger the drop that we have right now, the easier it is to believe. I'd also say that it's a very difficult thing to have a big rally in a market when you've got $15 soybeans or $6.30 corn. If you get a bigger break and we're starting from lower prices, that is a good setup for a rally. So these are all, I think, very healthy things. Again, the market's very focused on the weather and things being better than what we were looking at like 2 weeks ago. But in the end, I still think we're going to have some very interesting scenarios when it comes to the balance sheets for next year. As long as that demand is there, I really do think that we're going to be looking at a price ration scenario, especially for soybeans, once again.
Yeah, there's been some talk about a lot of expectation of higher corn acres in that report on the 30th, but maybe not on soybeans after all. We'll see. Ted, stand by if you don't mind. I'll bring you back here in a moment. We'll take a look at this livestock trade. Another limit down day in the hogs early on. We'll see if it's still doing that when we come back. Let's go back to Ted Seifried of Zaner Ag Hedge and talk about this livestock trade. I didn't see any live cattle trade so far this morning, Ted. I know yesterday we had a little bit that developed on a live basis. They were steady with last week. Rest basis maybe $1 or $2 higher than last week on limited trade, but boy, I tell you what, that wholesale beef trade, the beef cutouts have really struggled lately, and now the bellies have fallen off a cliff as well on the pork side. So what does that mean here for livestock?
Yeah, I mean, it's kind of wild for me to be seeing the cash coming down. And by that, I mean the box beef and the pork cutouts. Domestic demand, in my mind, is still really very good. Although, you know, in the last couple of weeks, we've gotten a lot more worried about inflation and things like that. So maybe we're not being as spendy. I don't know. I think that's gonna. I think that's going to turn around and pick back up a bit. Certainly, we look at the export market, and while today's export sales numbers were okay, I mean they weren't great. We're very worried about what's going on over in China. Chinese pork values continue to sell off. There's a lot of hogs going to market right now, so there's a lot of supply over there. We're not super optimistic about big pork sales to China, or even really big beef sales to China right now. So that's kind of leaning on us. However, I look at the slide that we've had in the hogs, and the cash index isn't really responding to that. I think at some point here, this is mostly like a technical market thing. At some point, I think we find some footing and start to bounce. The problem is that I don't have any big technical support in hogs in August until we get closer to the 92 level. So we'll see. I think today's a big day. If we're able to reverse and close near our highs, we might say, okay, that was enough of the slide for now. We have some gaps above us, namely around the 112 mark in that August contract that I think at some point we will go fill. Minimally, that's my upside target. But when do we stop the big momentous slide? And that's the question. And
Right.
jury's still out on today.
Absolutely. Well, I appreciate the comments, Ted. I appreciate that very much. And we'll talk with you again soon about the market volatility. Ted Seifried is with Zaner Ag Hedge in Chicago. Now let's review these market prices. We were showing the lean hogs there. They are limit down again today. The nearby July, $4.50 lower. August down $3.45, as we were mentioning. On the live cattle side, well, we're lower there too. We have August down $1.10 at $121.77. And on the feeder cattle market, as we speak, we have the August 87 cents higher at $156.57, but that's $1 off of our earlier high of the day. Janet?